The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the February 17th, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I'm absolutely grateful for your presence here. But more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off early, and send that to Steve at TFNN.com. Inside the subject heading, please put radio show question. Now, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. So we got a market that's mostly trading lower. The transport's up 133. The Dow's down 52. 13 for the S&P. 107 for the NASDAQ. 11 for the Russell. Semis down 11. Composite off 68. Gold's off 136. Silver $4. Silver is down $4.27, 5.5%. Light sweet crude 66 pennies. And natural gas off 19 cents. Our leaders to the club in the clubhouse to the upside. Dollar-wise, Massimo Corp $44. Lumenthum Holdings $27. Comfort Systems 21. GE Vernova 20. KLA Corp 17. To the downside, it's Booking Holdings a $75 move, nearly 2%. Bank of Montreal $42. Valmont Industries $33. Mercado Libre $32. And Vulcan Materials up 23. So plenty to look at. Of course, I want to look at what you want to look at. Let's begin with Friday's action. What happened on Friday? You should know. We had a new all-time high in the advanced decline line for the New York Stock Exchange. You know what that means, right? Oh, you don't know what that means. Here's what the probabilities tell us. The probabilities tell us there is a less than 1% chance of a 10% pullback in the next 7 days. There's less than a 1% chance of a 10% pullback in the next 2 weeks out there. Now, there's a chance of a 5% pullback. That's got like about a 2% odds in the first week, maybe 4% in week number 2 out there. But we're talking about when you get that, the market breadth is so substantial out there that it really lessens the blows of anything moving lower. So those of you who camped out, now if you're being short the NASDAQ, I get that piece of it. But the rest of the market, be careful. Be careful. If you're looking for some kind of big move to the downside, it just is not there. If we take a look at the spot VIX index, well above its 50-day exponential moving average. But we were looking at on this screen here, and maybe it did run into a trend line. I have the trend lines on this screen here. We've got our 9-panel market update chart out there. So keep that in mind as well. It is still above the 50-day exponential moving average, so it does provide buyers with the edge. And New York Stock Exchange, the advanced decline oscillator, is actually still above zero. That's pretty powerful. That is really powerful. Just gobs of market breadth out there. The choppy market, we know about the choppy market. Why? Because the choppy market is part of the midterm election seasonal cycle. And that's the cycle that we're in. Of course, this cycle says expect choppiness, maybe up until about the first week of March. Then we get a bit of a rally, then it'll move to the downside to the end of March, and one final rally up into the middle of April before we start to see a seasonal midterm election cycle that's taken place over 20. These are 24 touch points out there over the 98 years worth of data that we've got. So pretty solid. At this stage here, we seem to be following along these patterns. What do you mean we seem to be following along these patterns? Well, the news is that let me move this out of the way. The charts are the ones that confirming that. What charts, Stevie? Well, how about if we take a look at the daily equity future charts? 2 of the 4 have given us messages. Oh, well, maybe it's just one right now. I think one went away. Yes. So 1 of the 4, which is the NQ out there, the weakest of the 4 out here, has a new profile. It formed last week. We talked about it. That profile wrapped around the prior profile that tells you about to expect and anticipate a consolidating market. Well, so you got to go back and identify what the consolidation pattern is. And that's what we've got on that panel number 2. You can see the ES Mini also trading into a consolidation. Now, the ES Mini getting back pretty close to the bottom of that consolidation. Maybe it still wants to get all the way back to that level. And that level is right around the 67.75-ish area inside the NQ. It's right around 24,250, give or take out there. But just a sideways market. Inside the Dow Equity Future contract, you're just consolidating with inside its profile, as is the Russell 2000, which found support at the bottom of its profile this morning at 2613 out there. So a sideways consolidating market. That is the message from the NQ, the weakest indice out there. We can see that the S&P 500, the ES Mini, also trading in a consolidating market pattern out there. Okay, what do we want to take a look at? Let's go take a look at some of the intraday. Let's look at the intraday charts here. Just get a feel for what they are doing. First intraday charts we got out here are for the NQ. I'll need to repopulate the 10-minute charts out here, 10 and 15 and 30. But what we can see out here right now is the 60-minute time frame chart formed a Rhodes Momentum Indicator bottom pattern. It did that as we were coming on the air at 11 o'clock. And as we speak, price is trading above the top of its profile. So the 60-minute time frame chart is telling us it wants to move higher. Now, move higher to where? Well, the 30-minute time frame chart for the NQ shows that we already had a price spike up to the TD9 count breakdown resistance level at 24,797. That becomes its target. If price can close above it, since it's already acted as resistance, well, then that would be telling you something. That would be telling you higher price. Higher price to where? Take a snapshot of this screen out here. The first higher price level of real concern would be 24,856. That would be the bottom of its daily profile. Can price get back inside there? If it can, you then have resistance at 24,875, the 2-hour time frame TD9 count breakdown resistance level. That's what's going on inside the NQ, inside the ES Mini. Let's go take a look at its charting pattern, see what additional information I can provide to you out there. First place I'm looking at is a 60-minute time frame chart. I don't know if we have the same patterns associated here or not. We're going to find out momentarily, again, with regard to the NQ. Yes, we've got a Rhodes Momentum Indicator bottom, price trading above profile resistance at this moment in time. Tells us wants to head higher, waiting for the rest of these charts here to populate so we can give you where that next logical price target is. Was there a, no. It's going to be the 30-minute T9 count breakdown resistance level, 68.6225, already held as a spike high resistance level. So we know it closed above 68.6225, likely to lead to higher price. Higher price to where? I would say watch the bottom of that daily profile. That daily profile's bottom is at 68.62. And if you can get above that, 68.75, 68.78, which is the 2-hour time frame chart, TD9 count breakdown resistance levels. Those are the areas that I would be watching. Please pay attention to the all-time highs that are being made in the advanced decline line. They have significance to your trading style. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Hope everybody had a great Valentine's Day, a fantastic weekend, for all the cold weather that we had put up with. Well, down here in the South, you may be in the North and you got a whole different situation out there. It was, certainly it was certainly chilly down here. That's beyond, way beyond chilly. But as bad as that was, boy, this weekend turned out to be just fantastic, just absolutely perfect. Saturday, Sunday, yesterday, even today. I mean, it looks like, boy, I wish I did have a doctor appointment. I would squeeze a 4th round of golf in. I did get 3 rounds in the 70s back to back, and I want to see if I can do a 4th round out there. In any event, we're taking a look at, I won't be doing that today, though, gold chart out here. So if we take a look at gold, and you look at the bottom panel of the screen, you're going to see a 10-minute TD9 count bottom, a 15-minute and a 30-minute and 60-minute Rhodes Momentum Indicator bottom pattern. You got a TD9 count on the 120-minute time frame chart. So gold definitely attempting a bottom out here. Now, the next key level of resistance is 49.12. That's the 60-minute time frame oscillator and change line. So if we can get above that, the rally ought to extend itself up towards the 49.65, 49.78-ish type range out there. So that's what I'd be looking for a Goldilocks. Let's go ahead and get to some of the questions that have come in so far. The first one coming in from Sat P. And Sat would like to take a look at Lululemon. L-U-L-U is a ticker symbol out here. Oh, I don't have that up on my screen. You know what I've got is the Mag 7. Sat, just hold on for 1 second here, because the Mag 7 is, certainly an area where there's been, troubles. And as we take a look at its chart right now, ignore the wave number 7. That's really not an accurate one. We're really more in wave number 5, the letter E out there on my screen. But there is an A to B equals CD pattern on the downside. You can see it on the weekly. You can see it on the daily time frame. Those are 2 different A to B equals CD patterns, actually. I believe they are. In any event, if we were to get a bullish reversal candle inside the MAG 7, we don't have that. But if we were, on the daily, the weekly, we would have a Gartley buy pattern out there. Short of that, price may want to trade all the way down to the 55.42 level. That is the bottom of its monthly profile. Okay, now, Sat, let's go get to LULU, see what its charts are communicating to us. It'll take just about 10 seconds or so for these to populate. Lululemon has a Rhodes momentum indicator. Both got a wave number 7 bottom signal. So that's an active one for sure. And that was confirmed on Friday. Now, what you're looking for here, Sat, is price is struggling with that oscillator and change line. It closed slightly above it on Friday. Right now, that's a one-hit wonder. 174.76-ish is that number. If price can close above it today, well, then you'd have something. And I'd say, yeah, go ahead and take a few shares. Now, you may only get a rally up to the 188.77, 191.27 level. That's where a counter trend move in Lululemon for its daily time frame would come to an end. The weekly chart out here has not completed its A to B equals CD pattern to the downside out there. We're trading below profile support, but above its oscillator and change line. So nothing great there. The monthly time frame chart has an A to B equals CD pattern to the downside. That has not completed. That would get us down around the level of 129.31. We do not have. Well, let me just double check this here. That low. 160.46 and 159. So we don't have a TD9 count bottom pattern or anything there. And price is trading below profile support. So Lululemon, Sat, really looks like it's struggling. The monthly is saying I want lower price. The daily says I'm struggling with the red oscillator and change line. The weekly is trading below profile support. I'm going to say, you do have that bottom signal there. So, do as you believe. It makes the most sense for you. But not looking great, quite frankly. Not looking great. But sometimes that's a great thing. Start off by not looking great. BMNR, and I know that because I hit a few of those drives that did not look great. But had the scramble game going. So let's take a look at BMNR. See if we can find any kind of a bottom pattern here. It does look like we may have a daily by the D point bottom out here. Let's go draw that in here. Let's draw on the A to B point. Oops, that wasn't it. Let's try that again. Let's draw on the A to B point. Let's go ahead and move that over to the C point. Yeah, we can see we've done more than a one-to-one move to the downside, and we had that nice bull sash candle that formed back here on the trading day of February the 5th out there. I think it's the 5th. Let me see here. The 6th, February 6th out there. So you've got to buy the D point with price trading with inside its profile. It's a bullish structured profile. Yeah, you could go ahead and add a few shares here right now. At least that's what the daily chart is telling us. So the daily chart says 23.87 is its upside target. If you close above that, 28.73 becomes the next target. Now, on a weekly time frame, this would say, I don't see the buy pattern in here at all. Trade below profile support, red oscillator and change line. But the monthly says, hey, I just tested and so far rejected the bottom of my monthly profile. So that's what you've got working for you, Sat, is the monthly and the daily. That bottom of the profile is at 1898 out there. So your price target to the upside likely move to the upside around 2387, then 2873. If I put up my other system, we'll give you the 10-day average true range, BMNR. It should populate in the very bottom left-hand panel out there. That's at $2.04. So your stop needs to be $2.04 times 1.272 or 1.618, less wherever your entry point is at. And then you figure that out. Now, don't use that. You're using that to figure out your position size, okay? And your position size, pretty easy. You just take 1% of your available trading capital, whatever that is, you divide it by the stop. Okay, again, that stop meaning $2. How much is this? This was a buck. 204 times 168, 1.618 out there, and that becomes your stop size, and then you just divide that, and you come up with the total number of shares out there. So that's how you perform that task. So that's on BMNR. That was for Sat P. Fletch is interested in rigatoni out here. RIG is a ticker symbol. We'll move to those white background charts momentarily, but I'm just going to punch it up here to see if there's anything that pops up. Looks pretty good. Looks like a TD9-ish to me. So let's get to those other charts out here, Fletch, so we can give you a good read out here. So let's put in rig, see what this is doing, see if it's bypassing some TD9 counts or forming them. gating them, I should say, or forming them. So we take a look at RIG right now in its daily time frame, bar number 7 forming today. So could go on to form a TD9 count pattern. A bearish reversal candle would confirm a Rhodes momentum indicator top. However, today's bar is an inside bar, at least at this moment in time. An inside bar tells us that price is likely to move in the same direction that it came from. That says to the upside. So RIG likely to continue to move higher, Fletch. A bearish reversal candle confirms a Rhodes momentum indicator top for its daily time frame. The weekly time frame, I see we are in wave number 7. A lower high would confirm that. Wave number G, that would confirm a top out there. That would suggest a retracement back towards 511. The weekly is not the one that's in control right now. I really think it's more like the daily that's controlling things. And the monthly, it's pitching in here after forming a nice TD9 count bottom pattern. Price is now trading above that breakdown level, 598, Fletch. That is a bullish sign. So it does look like the Stevie RIG wants to continue to move higher, daily, weekly, and monthly. And if it does, the daily could go on later on the week to form a TD9 count top. So that's one thing to be looking for. Be an observational about that, as well as a bearish reversal candle. If you don't get that, Fletch, RIG is likely to continue to move higher. Ron in Denver wants to take a look at IOND. So we come back to this break. INOD is what we're going to have up on our screen. Stevie's going to go back to Ron's email and just make sure that I typed in the correct symbol. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. So let's take a look at ticker symbol INOD. This is for Ron in Denver. So, Ron, first things first, monthly time frame chart. We've got prices trading below its oscillator and change line. It's lost momentum. Trading with inside its bullish structured monthly profile, which has a buy zone between 30.41 and 36.21. That is likely the target area that you want to be watching and observing. We also have an A to B equals CD pattern to the downside. On a monthly basis, the swing point has volume. This is the month of December, 20 million shares. So far this month, we are at 16 million shares. So you're going to have the volume in IOND on a monthly basis to confirm an A to B equals CD pattern to the downside. Let's go ahead and draw that in here. We'll give you a, so I can grab this thing. Wow. What the heck's going on? All right, Ron, we're doing a game plan B. I still have to grab it, though. There we go. So you've got an A to B equals CD to the downside being confirmed with volume on a monthly basis. That would take us down towards 1976. The weekly time frame, the swing point was a bullish hammer candle. It was December 19th. It was 6 million shares that traded that week. It was passed with 10.3 million shares. So now you have a confirmed daily and weekly A to B equals CD pattern to the downside. Again, it is the same pattern, the same price projection level. I'm just going to simply move this A to B equals A to B line down to that C point out there. And what we'll also see is that price is projecting to get down to a breakout level or near a breakout level. You got 1895. As the weekly A to B equals CD pattern. Actually gets a little bit lower, I think. And the weekly's got a breakout level at 1479. So now to the daily chart. Let's go ahead and open this puppy up out here. Daily time frame chart. Okay. So the daily time frame chart has a TD9 count bottom, Rhodes momentum indicator bottom December 18th. That swing point had volume of 1.3 million shares. That was passed with 2.8 million shares. So you've got this A to B equals CD pattern to the downside confirmed daily, weekly, and monthly. Ron, I'm going to suggest that with regard to INOD, you let that pattern go ahead and play out. We're below profile support, the oscillator and change on the daily time frame, the weekly time frame, not on the monthly. And so the monthly does have this area between 30.41 and 36.21 that's going to try to act as a support zone, and it may, but you do have these confirmed daily, weekly, monthly A, B, C, D down patterns out there, Ron. So I'd be looking in a different place. How about Google? Well, that was your request, your second request. So let's go take a Google, see what we've got going on out here. GOOG, see what this is trading at, what kind of patterns we can identify for you there. Google right now, last firing off at about 301 and change out there. The daily time frame. So, Ron, we like this a whole heck of a lot better. What do you mean, Stevie? Well, you got bar number 9 today of its TD9 count. That says we should get a bottom today or tomorrow. That means the low of the pattern is going to be that key threshold level that no matter what trade you take to the long side, if that's what you're looking at doing here, which I believe you are, if you see a close below that, you would go ahead and, take the rest of your cash off the table because this would be saying, oh, that pattern failed and we're headed lower. So you're going to get a bottom into you're going to get bottom pattern inside of Google today and complete that pattern tomorrow. Now, what should unfold is a rally towards the oscillator and change line. So maybe that's what you want to take a look at as your option up towards the 322, 326 level. Let's say the TD9 count pattern fails. We won't know until sometime after Tuesday. If it does fail, then that is telling us about price making a move back to its weekly buy zone area between 269 and 278. The weekly has a Rhodes momentum indicator top that formed a few weeks ago. The monthly has a Rhodes momentum indicator top, but it's too early in the month to know whether or not that's going to form. You also have a TD9 count top that would form if we get a close above the close of bar number 5. And that bar number 5 close is up at 281.82. So the monthly's got a top, the weekly's got a top, and the daily's getting ready to bottom. All right, so back to the monthly chart. We're trading above its oscillator chains on a profile resistance. That's not so bad. In fact, that's very good. So it's really about the weekly. It's going to be the battle, Ron, between the weekly and the daily. Let's go with the daily. The question is, do you get more than just a 2-bar rally out there? That would just be a counter trend type move out there. And if you do, maybe you've got something here with a rally up towards that 326 level. So of those two instruments, Google's one that we like the most, and I hope that that helps you out. Always thanks so much for taking the time to write in. Mr. Bill, inside of Tiger's Den, would like to take a Microsoft. And Mr. Bill's interest is longer term, so monthly. And so what we'll do here, Mr. Bill, we'll take a look at Stevie's white background charts, but we'll also go ahead and put those black background charts, got the horizontal trading ranges, and we'll see where we're at. I believe we're up against a resistance level. But first, let's take a look at the monthly chart here for Microsoft, which has a Rhodes momentum indicator top, is trading below profile support, is trading into a swing point from back on May of 2025 out there. April of 2025. Volume there, 563 million shares. We've gotten into it. We've tested and rejected with 487. So 487 versus 563. You've got to do the math out there, Mr. Bill, to figure out if we're going to be, is going to be maybe a test on light volume or not. That can't do, my mind can't do that quickly. So that's a possibility. If we're pushing into that swing point with volume and we close inside that swing point, meaning it closed below 396.66 out there, then we would get down to test that low. Likely do that. The weekly time frame chart shows we're trading below profile support, oscillator and change line support, and it's telling us that it would love to go tackle 355.67. So that's the downside, Mr. Bill. Really kind of confirming maybe what the monthly chart, maybe what it's telling us. Don't know on the volume thing, but you go check that out. And then finally on the daily time frame, what I see out here from Microsoft is basically blah, 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 blah. Not much. But let's go see, was there an A to B equals CD pattern to the downside? Give me a second. Let's open up the daily chart. It looks like there might when I take a look at the weekly time frame chart. Let's just go confirm that. Yeah. Was that a 0.382 retracement at least? Let's go from this swing point out here from back on October 28th down to that wave 7 bottom low. And yeah, we got a pretty, it's close. No, it's close. So we're going to give it an A to B equals CD pattern to the downside. That has a buy the D point bottom pattern out there. We're priced right now pulling back into that hammer candle. That hammer candle is from the trading day of February the 6th out there. And that had volume of 45 million shares. And today so far we're into it with 11 million shares. Certainly light volume out here. So you've got a daily bottom. I know you're not really interested in the daily, but I just simply want to share with you what you've got in the daily out there. That suggests that we should get at least some kind of rally. That's with profile support holding. And that's, we'll get a rally if we can close above its red oscillator and change line, Mr. Bill. Daily time frame, that's at 403 and change out there. Call it 403, probably 50, something like that. If you do, then you can get a rally up towards 427. The weekly chart doesn't look so good. The monthly, you're going to do the analysis to find out where we're at on the volume as we test that swing point out there, and that'll kind of give you an answer to your question. C. Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. No requests that we've got in the system right now, so I'm just going to take a look and go through maybe the top 5, 6, 7 stocks inside of the NASDAQ 100. I've got the XL cap on my screen, so the number one sector inside the S&P 500. You can see the weekly TD9 count top out there with a consolidation with inside its profile. With price this morning testing, rejecting the bottom of that profile, 138.05. The weekly time frame chart, you can see sideways consolidation there. Price is trading with inside its profile. And then the daily, I should say, has that consolidation pattern, the one that we talked about, the consolidating market that we've got here. Now, price has gotten back into the buy zone for the XLK, so it may not get all the way back to the bottom of that profile out there. In fact, that low may be in and says that we rally up at least towards the Southern change line around 141.22, maybe 142.49 out there. Now, we took a look at Microsoft, which is the third weighting inside of the Qs out there. Let's take a look at the NVIDIA. Still the number one weighting. I believe it's still the number one weighting at about 8.7% out there. Let me take a quick peek here. When does this say it's as of? Okay, I just lost that. All right. It's a 213. Okay, as of Friday. Okay. Yep, so that's good. So, we pull up NVIDIA, and lo and behold, what do you got? A consolidation pattern. Kind of says it all, folks. Yeah, consolidating market out there. That's why I say please don't get too carried away to the downside. Don't get too carried away to the upside. You just got a sideways consolidation move. With right now in NVIDIA, price holding profile support at 182.76 out there. Weekly chart consolidation with inside the profile 171 to 191 out there. That's NVIDIA. Monthly Rhodes Momentum Indicator top, sideways consolidation though. All right, number 2 waiting is Tesla, TSLA. Let's get that up on our screen. So Here it's possible that Amazon has formed at least a short-term bottom with support holding. In the case of Tesla out here, it has a nice TD9 count bottom that was tested this morning. The swing point that we're taking a look at in the daily time frame was back on February 5th. Volume there, 72 million shares. So far today, 28 million shares. It's pretty decent volume, so maybe we're going to get back down to the test that swing point. It was a test and rejection, at least at this moment in time. The weekly time frame chart, Rhodes momentum indicator top, price finding support at the bottom of its profile, 394.39, and monthly very strong. Profile resistance is held. That was the top of its profile, and it's oscillator and change line out here. So just the daily time frame, it has tested and rejected the swing point, but maybe a little bit too much volume and suggesting at least another test of that. But no breakdown message inside of a Tesla. We don't see that. Let's go take a look at Facebook. META is the ticker symbol. See what it is doing. Of course, Facebook, Meta, significant percentage inside the XLC communications sector for the S&P 500. Here, we can see that Facebook is pulling back to test a breakout level at 626.55. No other bottom signal for its daily time frame. Weekly chart, we're trading with inside its profile. If 626.55 fails, we should see a move to 599 to 616. The monthly time frame chart, Rhodes momentum indicator, top price trading inside its bear structured profile, could be making a move to 543.09, the bottom of that profile. None of that's going to matter until you get a break of 626.55. That's its TD9 count breakout level. Now, on a daily basis, is there an A to B equals CD pattern to the downside that has been triggered? The B point out here would be the day of February 6th. Volume 18 million shares, passed with 12 million shares. So right now, the answer to that is not confirmed with volume, but you still have that pattern that is in place out there. That's what's going on with Meta. Let's take a look at Walmart out here. Walmart, WMT is the ticker symbol, number 4. Number 4 waiting. Inside of the QQQ? Yeah. Inside the Q. QQQN. What is that? I don't know. Okay, we're looking at the right thing, though. So we take a look at Walmart. So today, Walmart is generating what looks like it will be a Rhodes momentum indicator top. So the daily time frame has us back inside our profile, below its green oscillator and change line. If it closes below 130.27, odds favor, folks, Walmart moving back to the buy zone between 125.71 and 127.23. A weekly bearish reversal candle would confirm a weekly Rhodes momentum indicator top. That would suggest a move to 124.16. If price got below that, then we'd be looking at 117.45 or 113.74. And the monthly says, when you guys are done with your shenanigans, let me know because I'm ready to move higher. So longer term, monthly time frame, want to move higher. Daily and weekly are saying something else at this moment in time. Still no other requests. Let me see what followed Walmart out here. Walmart was followed by Google, we've already done that. Avgo. Let's finish it up by taking a look at AVGO. Broadcom out here, see what this is doing. Rahul, we could take a look at Costco and Mercado Libre. We take a look at Broadcom out here. We got a daily consolidation with inside profile range 313 to 339. Monthly consolidation between 321 and 354. Those are profile levels. TD9 count, Rhodes momentum indicator top on the monthly time frame chart. Price trading with inside its profile. 283.41 would be the next level of support on a further move lower. Let's take a look at Costco. Costco, COST is a ticker symbol. As for Rahul, inside the Tiger's Den. Rahul, we've got Costco trading out right now at 1014.07. That happens to be above the top of its daily profile. If you were to see a bearish reversal candle, that would confirm a Rhodes momentum indicator top for the daily time frame. Short of that, and as long as price remains above 1009.62, you're likely to see a further rally. The weekly time frame shows us in bar number 7. Let's go see where we're at and what we're taking on. I'm just trying to clean up the chart here. So now we pull this thing back. We are trading into we're trading into a TD9 count top that had formed on June the 6th out there. That swing point had volume of 10 million shares. We got into that swing point on Friday with 11 million shares. When you close inside a swing point with volume, it increases the odds, Rahul, that you're going to go test that high. So I would have to say right now, with this only being bar number 7, the price target for Costco is going to be the top of its weekly TD9 count pattern at 1067.08. The monthly time frame supports that idea because price is trading above its green oscillator and change line as well as the top of its profile. It is also trading inside a swing point. In the case of Costco, that would be February of 2025, a year ago, that had 36 million shares. So far this month, we are up with 25 million shares. I don't know if we're going to have more or less volume out there. But it's bullish on the monthly right now. It is bullish on the weekly, and it's bullish on the daily. So I say Costco moves higher. Your next request, Mercado Libre, MELI. Let's get it up on our screens out here. We got Mercado Libre. She is trading out at approximately, I'm going to tell you what that approximate level is. Oh, I typed in the wrong symbol. No wonder it didn't work. We come back from this break. We will take a look at Mercado Libre and Amazon to finish out the show, MELI. Be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're tickling Mercado Libre. MELI is a ticker symbol out here. Monthly time frame chart. You can see how prices pulled back into its buy zone. And that buy zone exists between 1745 and 1945 out there. So that is proving to be a difficult level for price to get through. If you look at the weekly time frame chart, our price is trading below profile support out there, below its red oscillator and change line. So that's not a good scene. In other words, support is all the way down at about the 1550 level. However, the daily time frame says we're getting ready to rally. At least as of 11:54. It may be different at 4 o'clock. What you're watching is the swing point from back on December 17th that had a volume of 687,000 shares. And the high, it's 1906. This morning we tested and rejected that level. We've got volume of 193,000 shares going into 687. So lighter volume out there. If we do close above its high, 1956.05, we likely rally up towards the 2038 level. That's what I see with regard to Mercado Libre. Let's take a look at Amazon out here. AMZN is the ticker symbol for Duncan Steve inside the Tiger's Den. We've got Amazon. She is trading out at about the price point of 201.54. It's got a beautiful TD9 count bottom pattern there, Dunk. This should rally up towards the bottom of its profile. And that bottom of the profile is at 204.91. If we can clear that, 209.52. Now, 209.52, between 204.91 and 209.52 is the level where a counter trend rally would come to an end, if that's all that it is. If you close above 209.52, you're likely headed towards 218.73, the top of its weekly profile. The weekly time frame needs a bullish reversal candle to confirm a bottom, and the monthly, it's pulled back to its buy zone. That buy zone is between 169.79 and 197.07. Folks, great to be back with you on Terrific Tuesday. Please stay tuned for all the great programming. I'll look forward to seeing you on Wonderful Wednesday. In the meantime, be safe out there, take care, and we'll see you soon. Thanks for joining us.